Checking in on the stock market today. So a low volume, fairly slow day out there in the broader market. There were individual names that were running, the solar sector responding well to the stimulus bill that was passed, and we have a tightening range on the S&P 500 to be checking out for the next couple of days.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So where we left off yesterday, this is the S&P 500 futures 4-hour chart. We were looking for a 4-hour lower high to be set and a tightening range to then form. It's favoring the bulls in the sense that it was a bull flag. We did double top and reject from resistance this morning. Then we dropped down and held support. But why I say it favors bulls, we're certainly just going to be watching for the direction that it breaks. But I would have expected more pullback. I would have expected the 4-hour lower high and higher low to then be forming around here and then to tighten up. So we very briefly pulled back, and it is all about this support of 36.76 and this resistance of 37.07. And if we're going to align those with SPY levels, we are looking at pretty much 369 resistance and pretty much 366 support. And we are currently closer to support than we are to resistance. We're a dollar and change above it, but we are in the middle of that range. So we'll see if it breaks overnight tonight. But again, look at the volume on SPY today. And the daily volume on SPY, we closed out at 46 million. So it definitely poured on into the end of the day a bit there. But look at it being clearly the lowest volume day that we've seen in a while. And if you erase what happened right at the end here in the last 10 minutes, it was the lowest volume day in months, aside from the half day back in Thanksgiving. So bottom line is that means don't overtrade. You need volume and volatility to be actively trading often. If you don't have that, you're going to give away money. So on days like today, I know to be extra picky and I know to sit on my hands. And because it was low volume today, I know to be patient and picky for the rest of the week. We have a full trading day tomorrow, a half day Thursday, no trading Friday, and things are slowing down a bit. So 4-hour equilibrium on the S&P 500 futures is short-term what we're watching. IWM. Daily bull continuation after a very quick higher low is set right off of EMA 12 support. All-time high 197.83 is in play. We didn't break it, but we are right there, and that is the highest close ever on IWM for the bulls, keeping their control. Here was the NASDAQ rising wedge. You can see it's still in play. So if that 4-hour equilibrium breaks bearish, we'll be watching for this 12-hour futures chart of the NASDAQ to potentially break bearish as well. So keeping a close eye on this, but as far as QQQ, higher lows set at 303.60, all-time high 312 essentially, and we are fairly close to that level. If we were to get a bull break and no follow-through, we know that that rising wedge would still be in play. Healthcare sector, weekly equilibrium is tightening up. Daily time frame, pretty much an inside bar. And it was, we rejected from the high of yesterday by 4 pennies. So a lack of bounce follow through. And the daily chart's getting a bit choppy for me. So whenever that happens, I zoom out. And the weekly chart is easily much more clear for me than the daily chart is right now. So I'm going to be focusing on the weekly chart more than the daily chart for the healthcare sector. Financial sector, closing week. Sideways on the daily here. We would have to hold 28.11 and break 28.84 to start to shift this momentum. We actually double top there by a couple pennies. But if we break 28.11, it's bears taking over in the short term. So 28.11 is still in play, and that would lead to further weekly consolidation. So there are some stars aligning, so to speak. S&P 500 4-hour equilibrium breaking bear. NASDAQ futures rising wedge breaking bear. Financial sector, if we broke 28.11, further weekly consolidation. These are all check marks that have to be checked off by the bears. We know the burden of proof is on the bears. Unless you're checking off every one of those boxes, the bulls are going to keep their full control. XBI, all-time highs. extremely strong. It's the CRISPR stocks, the gene editing stocks that are surging higher and helping the biotech sector significantly. And the line in the sand level remains for me down at 143.31. Anything above that keeps the bulls in complete control. Semiconductors still tightening up. 210.41 would have to break for a clear bear break if that were to happen. Further weekly consolidation. It is a potential weekly bull flag at the moment, but if that support level of 210.41 breaks, odds of a weekly bull flag would decrease a bit. Solar sector continuing on fire, again thanks to the stimulus bill and some better than anticipated relief and funds. 9 days in a row with a higher low every day. Bulls in complete control, and we'll be watching for a daily higher low next time we consolidate once we lose the hourly uptrend. But very significant follow through, 25% plus on that weekly bull flag confirmation. And the VIX giving it all back. I like the 4 hour here, looking for a higher low. And what's notable is we kept consolidating here, but the dollar saw a very big 4 hour bull move. The dollar bounce attempt is not done yet. So we're still watching 91.24 as the most important level, but we had a 4 hour bull break today. It's an inside bar. Strongest close we've seen in a few days. And it's all about 91.24. If 91.24 breaks, the weekly bounce will be underway for the dollar. We will be looking for a weekly lower high, but that will increase the odds significantly of weekly consolidation in our assets. So again, check marks for the bears. That's just another one. Dollar breaking 91.24. Gold, weak, heading towards the low of yesterday. So that low is in play right now, 18.55. We got some clear little 4 hour lower highs. If that level breaks, daily consolidation continues. We look for anything above 18.19 to be a daily higher low. But again, the dollar bounce is going to be important here. Silver, same thing. Low of yesterday in play, 24.95. And we're looking for a daily higher low, anything above 23.59. I made an add to my IRA, as I said yesterday, in some of these metals, and I will add a second position to them on a weekly higher low. So say the dollar does bounce on the weekly, and say silver keeps pulling back down into the 23s, I will make another entry playing off this support level, adding to my position to look for that weekly higher low attempt compared to 21.89. Miners giving a red flag here. We've seen the miners lead the metals multiple times in both directions this year, and this would be miners leading to the downside. So miners broke the low of December 16th today. What was the low of December 16th for gold? That was down at 18.44. So we're still about 1% above that level. Not a huge difference, but a notable weak day today. We're looking for a higher low compared to 34.26, but to change this daily, or I should say to break that daily resistance straight into that big of a pullback, it's keeping this weekly chart weak. This is a weak weekly bounce. And we are back testing and rejecting from EMA resistance, and we could definitely see another leg down, especially if the dollar bounce gets any follow through. If the dollar bounce does not get any follow through, we're going to be looking for the metals and the miners to get further bounce follow through and further confidence off of their monthly higher lows. Everything for me is about the dollar here in the short term. Energy sector, I don't care. Let's go to oil. CLG 2021, daily inside bar, 4 hour tightening range on the verge of a bear break. Support is 46.60, 46.25. You want another bear check mark? Have to break the low of 46.25 on oil. Inventory report tomorrow, tightening 4 hour equilibrium. Natural gas, still grinding higher. It's not giving the bulls any chance for a daily higher low entry. All about 285 resistance from here. Every day is a higher low aside from fractions of pennies a couple times. And that pattern has to break noticeably for a clear daily higher low. So I have been spinning my tires a bit the past week, and I went from a streak of being really on fire, one of my best consistency streaks ever in my life trading. I think I had it was pretty much 2 months of just every day up. And it was capped off by 22 green days in a row. And since then, it's just been sideways. But that sideways, psychologically, I feel like I'm losing. And today my account closed tied for the highest level ever with yesterday. And I feel like I'm losing. So I'm recognizing that psychologically just by assessing myself and where I stand. And essentially, I'm just going to sit in cruise control and be very picky for the rest of the year because we only have 1.5, 2, 3, 4, 5.5 trading days left in the year. And I'm looking forward to just psychologically starting with a fresh, clean slate from square one. Not going to coast off of, right now I'm coasting off of 2020. Good success, reaching my goals, exceeding goals. And I'm looking forward to starting with a fresh, clean slate. And that's going to be in a few days, a couple weeks. So that is where I stand. I'm being very picky, especially with the lower volume. There's some nice individual names that are moving significantly. We've got Riot. We've got a bunch of the solar names seeing strength. Some of the electric vehicle battery names still seeing a lot of volatility. But aside from individual names with volatility, the broader market as a whole is slowing a bit. So that's just reflection on myself and recognizing something's a little bit off psychologically. It doesn't make sense that I would be feeling like I'm spinning my tires when we're at all-time highs, but it's just some reflection. So for me, normally, if I weren't running the chart, guys, I would take the rest of the week off easily. Just be done with it, maybe even the rest of the year. All right, hope you're doing well. Do good things. Have a good rest of your day, and we will see you tomorrow.